What's with all the bearish talk about gold? Joining us on Technically Speaking, as always, is Jim Wyckoff. Stay tuned. So Jim, have the bears come out to play? As we know, famed newsletter writer Dennis Gartman speaking on the record yesterday saying that gold has entered a bearish period since the summer of 2011. What are your thoughts?
Well, Daniela, we've got several fundamental factors that are presently working against the gold market on a near-term basis. Think about this. We've had the past few months, we've had lower market volatility on a daily basis. You've had an improvement in sentiment regarding the European Union sovereign debt crisis. You've had a de-escalation of the tensions in the Middle East, specifically regarding the U.S. and Iran. And in fact, this week, the U.S. or the United Nations and Iranians are going to meet to discuss a compromise on their nuclear standoff. So you combine that with the fact that the past several months we've seen better economic data coming out of the U.S., and it's augured for a low volatility environment that is attracting assets away from the safe haven gold market. Now, if you're a bear, if you're a gold market bear, you've been enjoying that confluence of events that are producing the lower market volatility. However, if you're a gold market bull, you should be laying back here thinking, how long are these 4 or 5 events going to stay static? And history suggests that at least one of these factors is probably not going to be static, and if that's the case, that's going to be bullish for the gold market. A flare-up of tensions in the Middle East, any kind of a hiccup in the European Union debt crisis. We're already seeing bond yields in Spain and Italy this week rising a little bit, so may not be long before that situation's back on the front burner. So it's probably a bit odd that we've had this quieter market activity the past few months, and really the odds favor something cropping up here in the near term that's probably going to favor the gold market bulls.
Jim, I was actually speaking to one analyst who told me that those who are surprised by this quiet ride in the gold market right now are traders who are relatively new to the market, traders who have only been playing in this field for the last 5 years. What are your thoughts?
Well, it's interesting. Gold traders can be characterized in many different fashions. If you're a near-term trader, if you got long gold 3 weeks ago or 3 months ago, you're probably suffering a little bit of pain right now. If you've been buying and holding gold for the past several years, you've seen a little bit of a price pullback, but probably nothing major that's going to hurt you. So it's all a matter of your particular trading time frame. Here's an important point. I've said this before. If you look at a longer-term monthly chart for gold, we are still in an 11-year-old uptrend. The present price pullback is nothing more than a typical corrective pullback that we've seen in recent years. The overall longer-term price uptrend in gold is in place. If we do drop nearby COMEX gold futures prices below $1,500, that is going to begin to produce some longer-term chart damage that would begin to call into question the longer-term price uptrend. But until that happens, we're just seeing yet another downside correction in a longer-term bull market.
All right, Jim, it's time for your Wyckoff market rating system. What grade will you be giving gold and silver this week?
Well, on a near-term basis, now my market ratings, importantly, are on the near-term basis or by looking at the daily charts with price actions, say, over the last month or two. So my near-term market rating for gold this week is 4, same way with silver. That is leaning toward the bearish side because both gold and silver prices are in 5-week gold downtrends on the daily chart. Now for the gold market, from a technical basis, we've got technical support at last week's low of 1613, and then we've got psychological support at the $1,600 level. On the upside, we've got resistance at last week's high of 1685.40. We've got psychological resistance at 1700. Now that's for June gold. Now on May silver, you've got technical support at last week's low of 30.98. And then you've got some major psychological support at the $30 level. On the upside, you've got chart resistance at last week's high of 33.29.
All right, Jim. And just one last thing. I interviewed John Nadler yesterday where he was telling me that it's really all about the US dollar right now. Do you agree?
No, I would disagree with that. I mean, I think the dollar has something to do with it, but it's really more in the gold market about the events I talked about. It's about the lack of volatility. It's about the the safe haven allure of the gold market has just kind of taken a break recently because we've got a quieter world marketplace, and that is allowing some flowing of money out of the gold market. Now, certainly the dollar index continues to be an outside market for us, but it's just one element among many that are impacting the gold market at present.
All right, Jim, fantastic. Final thoughts for investors this week.
Keep an eye on the charts. Look at those support and resistance levels, and if they are breached, then you're probably going to have some bigger price moves.
Jim, we'll be watching those charts, and we'll be seeing you next week for a new edition of Technically Speaking.
Can't wait till next time, Daniela. Bye-bye.
And thank you for watching. You can email me, as always, at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.